Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend, and I'm going to give you guys a quick update on everything that happened last week and what to look forward to this week. So, before I get right into it, I got a quick dad joke for you guys. This one's on the edge a little bit, but it made me laugh. So, what's the difference between Michael Phelps and Hitler? Michael Phelps and Hitler. Michael Phelps can finish a race. Get it? Pew-pew. All right, so getting right into it. Moving into everything that happened last week. So last week we had a government shutdown. Now, the other thing that was important about what was supposed to happen last week specifically, is that we were supposed to get the unemployment rate. On Wednesday is when everything was announced that the government was shut down. Then currently there is no plan. Until they decide there is a plan, we don't have a plan, and the unemployment rate will continue to be delayed as far as the report comes, in order for us to get an idea of what's going to become of it. We did get some other labor reports as far as the private job sector, job openings. For the most part, it still points that the job market is still very, very weak. So ADP employment, that's a really big thing because it goes into private sector. Now, what's noted about that is that they were expecting an additional 50,000 jobs. Actually, the report that we got was a negative 32,000 jobs. So basically an 80,000 job swing on the negative side. So that's what's really important. Another thing about the report is that, the amount of people staying at their jobs is higher, and the amount of people changing their jobs is less. So if everyone's trying to keep their jobs, basically, they're not trying to move, they're trying to make changes or anything like that. But that big note of expecting 50,000 jobs, but we got what we got was a negative 32,000 jobs, is a really important feature that we need to understand when it comes to what the unemployment rate is going to show when it finally comes out for the month of October. So that's going to be really important, because the other thing that the unemployment rate is going to be a huge impact on is what the Fed is going to do at the end of the month in regards to the Fed funds rate. Are they going to continue to lower it, or will they just keep it the same? They already did a negative, they already dropped it by 25 basis points, or 0.25% about a couple weeks ago. So we did see that change. But one of the things that it relates to is I'll show you guys in a chart in a little bit, but for the most part, it didn't really impact rates the way a lot of people think it would. But what's really important is, if I show you guys this chart, you guys can see the change in just the jobs. Again, we were expecting a plus 50,000 jobs, not a negative 32. So that's another important detail about the jobs reports coming up. Also, job openings is still remaining high, which means a lot of people aren't filling those jobs. The next thing is the rates. Of course, for the most part, all of last week, they pretty much stayed flat. Here's the marker where I put where the Fed changed the Fed rate to be 0.25% less than what it is now. So it's roughly between 4.0 to 4.25 for the Fed funds rate. With that in mind, rates did jump up by maybe slightly 0.25%, but for the most part, they remained steady, which is a good thing. Remaining steady is a good thing, especially with everything we saw last week. So what we're seeing right now is we're still expecting rates to come down. You can see by this dotted line, based on our trend since the beginning of the year. I mean, we're already lower than the lowest peak we saw in this year. We're basically, the average is getting a lot lower. So it's heading in the right direction, which we do like. So, but that's pretty much what I got for you guys today. There's not a whole lot of news this week, except what's going to be coming next week. Next week, we're going to begin all the inflation reports for PCE and CPI. So I don't expect much from those inflation reports anymore. For the most part, there's only so much they can move now. We're expecting big swings, and we already saw that. I think now it's going to be pretty leveled off. Again, the only thing that's really keeping rates as high as they are is the unemployment rate. As soon as this whole government shut down and all the 750,000 people who are furloughed get all figured out, we hope to see that mortgage rates continue to improve in the right direction. So a few clients are waiting to rates to be in that good direction before they actually lock into refinance. But that's effectively what I'm waiting on to lock everyone else in my October pipeline. Otherwise, hopefully this helps you guys better understand what's going on. Otherwise, Scott, that's all I got. Nuke out.